Everyone on YouTube has been lying to you. You do not need all the overcomplicated stuff being taught. All you need is one 4-hour candle and time. This will be a part 2 of my video, One Candle Tells You Everything, but this time we'll be diving deeper into the secrets of time and truly why one candle is all that you need. So in this part 2 video, we are going to be focusing on the 4-hour time frame, which to me is ideal for intra-week trading, okay? We're then going to drop down from the 4-hour time frame into the 15-minute and 5-minute for an entry or an entry pattern sort of thing. But this video is focused on the 4-hour time frame. It's a perfect intra-week time frame, okay? More specifically, why I called it One Candle Tells You Everything is because we are focused on one 4-hour candle. I can tell you now that this candle is the 9 a.m. on Forex pairs, the 9 a.m. candle. The 9 a.m. 4-hour candle tells you so much that you don't actually need anything else, okay? And I'm going to, in this video, be teaching you how to use this, okay? Exactly how to use this one 4-hour candle to take all the trades you will ever need and become a profitable ICT trader. So let's dive straight into this here, okay? Our focus here is on the euro dollar 4-hour chart, of course. Now you can see we're overextended on the sell side here. We've been delivering sell side and we've come into a discount of this swing. Okay, if you take a fib from here to here, once traded back down here, this is a discount. You can see, we begin to consolidate. And then with this candle down here, we take out some sell side liquidity. Resting sellers get tagged in here, and then we pump higher, breaking a swing high in the process. So if we mark this up, you can see we broke the swing high after sweeping some liquidity. We were in an overextended market to the downside, and now what we want to look for is expansion during New York session. Okay, using our 4-hour candle. So let's build some logic and let's build some framework around this. Okay, you can see we're in a discount. We've swept sell side liquidity and we've broken a swing high. We trade down and now we're trading away. We have a down close candle which gets closed above. At this point, this down close candle becomes our order block. If I make this obvious to us, you can see this is our order block. Remember, rewind and go through the logic of how we got here. We close above the candle, wick down at what time? 9 a.m. and then we expand. Then the very next candle expands also. Let's dive into this 9 a.m. candle and let's see exactly what happened down here. Okay, now you can see instantly it's a bit choppy. It's not ideal, but this framework is still there. Okay, we close above on the 4-hour chart and then 9 a.m. opens up. What does 9 a.m. do? Wicks lower, back into the 4-hour order block. Then we pump higher. If we drop even further into a 5-minute chart, you can see this pump higher happens here. We break another swing high, create a low, and then run higher. Come back down into a discount of this swing, and then pump higher, running buy side once again. This pump here happened in the 9 a.m. candle, okay, the 9 a.m. 4-hour candle, because first the candle opened up, gave us an open, a low, a high, a close, and then we rallied, okay. What I'm going to teach here is you can catch the move on the 4-hour candle. You could do this by dropping down onto the 1-minute chart here, finding an entry within this, and run that expansion up towards the buy side liquidity. But let's find an even cleaner example for you, okay? Let's go through our logic once more on a different 4-hour candle. So remember, we've broke structure here. What are we waiting for now? Well, we're waiting for price to come back into a discount so we can look for shorts again, for longs again, sorry. You can see price does come here on a Monday at 9 a.m. However, I don't trade Mondays because it usually creates the opposite end of the range. So I would ignore this, right? Skipping forward onto Tuesday. Look what Tuesday does. We're still inside this range, remember, because we have an impulsive price swing. We drop back down into a discount. Look what happens. Notice what this candle does here. Remember these set of down close candles? That's your bullish order block. We trade down into it, and then this candle closes quite bullish. Notice the reaction we give off of this order block. The bodies are closing outside of that line, and then the 9 a.m. candle opens up. So let's dive into the 9 a.m. candle on this day. It is the same thing repeated over and over again. Tuesday 9 a.m. candle opens up, gives us an open, gives us a low, we rally, and then come back and offer fair value inside of this fair value gap. Okay, you can see here we offered fair value after giving an open, we ran higher, made a low, which is what we're waiting for. We're waiting for the low of that 4-hour candle to be put in, which happens right here. Price rallies up, breaking another swing high, coming back down, offering discount inside this fair value gap, and then that's your buy signal inside the same 4-hour candle, because we had an open, low, high, and close up here. Okay, that's the same exact thing. We break a swing high afterwards, and then the entry. This is all based on one 4-hour candle. Let's go into this candle now, Wednesday, the very next day. Now, if you look here, you can see that we've been expanding from this discount. If I get rid of all these lines here, if you remember, we've been expanding from this discount. Now we've been rallying into down close candles here and redelivered rebalanced price ranges. Now we're waiting for the 9 a.m. candle. And remember, we're in a heavy discount. Okay, there's buy side liquidity up here and a rejection block and this fair value gap. Okay, now we're going to keep expanding until we come into a premium of this price range is what we're focusing on. And look inside here. What does 9 a.m. do? Because we're in expanding conditions, you only need this 9 a.m. 4-hour candle. Look what 9 a.m. does once again. Where does it open up? So price opens up here. It creates a low, sweeping out liquidity, right? That liquidity gets swept as soon as 9 a.m. opens, and this is your opening price right here. Okay? That right there is your opening price. Remember, our 9 a.m. 4-hour candle has to create an open, a low, a high, a close when we're expanding. Open, low. Now we can begin expansion because we opened up on the 4-hour candle. We swept sell side liquidity inside a fair value gap. Now we can begin to expand. You can even drop to the 1-minute chart and find an entry inside here. So this is the power of one 4-hour candle. Okay. Price creates a low, creates a high, creates a lower low, and then rallies higher. This here becomes our breaker. And as we overlap with a fair value gap here on the 1-minute chart, on this breaker, and the opening price, we've already had a Judas swing lower to create the open and the low. We rally higher, break in a swing high. Notice how it's the same framework every single time. Break a swing high, and then we have a fair value gap partnered with this up close candle, which is our breaker because we have done this. Okay, this is what we've done. Price now wants to come back down into here, offering fair value inside the breaker and our fair value gap. This is exactly what we've done, and our opening price is about here. Okay, so we've offered lower prices here, and we are in oversold condition on the 4-hour candle. Rally up, breaker swing high, fair value gap partnered with a breaker, and then we rally. Look how quick we run from here. Okay, look at the expansion on this, and this is just a 1-minute chart. So if you think of a 4-hour candle, this is our first hour of the 4-hour candle. Okay, from here to here. That is about, if you took your entry there, within the first hour, that's about 16 pips on a 1-minute chart. That's about a 1 to 4 if you put your stop loss below here. Okay, now this is the power of that one 4-hour candle. Go back test this yourselves. This is really powerful on EU, GU, any of your major Forex pairs. Go back test this and let me know what you find. If you did enjoy the video, please do drop a like and drop a comment. Go check out my socials in the description below, and I will get back to any of you in the comments with answering any of your questions. So thank you as always for watching, and I'll catch you in the next one.